Hello, I'm Michelle Makori, and this is Kitco News coming to you from New York. Joining me now is the man who disrupted the so-called smart money on Wall Street by channeling the collective power of retail investors. Jaime Rogozinski founded the subreddit WallStreetBets, which now has over 10 million users and was instrumental in the rise of meme stocks. He's now shaking up Wall Street again by bridging the gap between crypto and equities. Jaime, good to have you with us on Kitco.
Thank you very much for having me. It's a pleasure.
All right, Jaime, let's first address the elephant in the room, if you will, and that is your current status with the WallStreetBets via Reddit. Where do things stand there?
So I was removed last year as a moderator, as the head moderator of WallStreetBets in April of last year. Details as to why are going to be disclosed in a movie. So unfortunately, I'm tied up with a contract for my life rights haven't been sold. So as soon as that movie comes out, then I'll be happy to talk about all the details.
All right, I want the exclusive interview as soon as that movie comes out as to
Fair enough.
What exactly happened. But I think you can tell me how you feel about that, considering you founded this movement, which became a giant online community that really took on institutional investors. So how do you feel being effectively removed from what you founded?
You know, WallStreetBets has become so much more than just a forum itself, right? I am so happy to see what happens when I'm there and when I'm not there. All these things, you know, GameStop is this big event that got the attention of the news around the world, but there's been other events throughout the past decade, none of which was me actually telling the users to do it, right? It was the actual users that come together and they come up with these just brilliant ideas, and sometimes it's memes and funny, and sometimes it's cheat codes, and sometimes it's what we saw with GameStop. But it's a community-driven thing. So I continue to watch what they're doing, continue to be proud of the community, but it lives in so many places now, right? I got an email yesterday by a reporter in Korea saying they're starting K-Street bets because they want to stop the short sellers, and they want to know whether I'll give them my endorsement. And I said, absolutely, because, you know, enjoy it in Korea and in India and whatever other country you live in, different asset classes, silver street bets, Satoshi street bets. It's this omnipresent kind of philosophy that lives on all the different platforms, including Reddit and Twitter and Telegram and Discord and you name it.
Yeah, well, look, you've certainly created a movement, or an instrumental part of creating a movement which has empowered the retail investor, and you still command a huge social media following. And now you're launching a new product, a new decentralized finance product that is going to potentially shake up Wall Street yet again. Tell us about it.
So I made the mistake assuming that crypto was just the price of Bitcoin or Ethereum or whatever, and it's just supply and demand, and it was not really that interesting to me. And it's a mistake because this year I took a deep dive into DeFi and the crypto, the blockchain, and I'm baffled with what's available. They're baffled by the amount of sophistication and money and everything else. And so what I'm hoping to do is bridge those two worlds of Wall Street, which is where my strengths are and my passion, with the blockchain finance. This is and what this means really in practical terms is that people are going to be able to make investments and participate in you know, their financial independence through the blockchain using all types of asset classes, right? So on the blockchain, people are able to buy stocks, metals, energies, whatever, as well as cryptocurrency. So one-stop shop. Okay,
well, let's get into a little bit more detail, because one of the things that you're doing is stonks, I believe, tokenizing stocks. So break that down for us.
So we're watching, well, stonks really just mean stocks on the blockchain. That's really what that term means. And we've seen the lines be blurred between Wall Street and crypto. So you've seen the futures, the CBOE started trading Bitcoin futures at one point. You know, a lot of ETFs are trying to exist around the price of Bitcoin and other cryptocurrencies. And then you're starting to see kind of, everybody knew the Coinbase IPO, just, you know, a lot of crypto stuff seeping into Wall Street. And you're starting to see Wall Street type stuff seeping into crypto, right? And so this is what we're talking about stonks in here. These are tokenized stocks, people that want to buy Apple or Tesla or whatever on the blockchain without having to use a broker or without having to use or be a citizen of a particular country, being able to buy not just American equities, or at least get exposure to those American equities, get exposure to equities in Korea and China, India, whatever, all around the world. So further breaking down the barriers for people to participate in finance.
So the token is linked to a particular stock and mirrors the performance of that particular stock. Is like one token equal like one share of Apple, for example?
Yeah, I mean, that's an example. And you can buy fractions of it, something that also exists in regular finance now, like these fractional shares. But yeah, one token is going to equal one share in whatever stock it is that you're trying to get exposure to.
Okay, so why would I just not buy Apple equity directly? What's the advantage of using this, for example?
Well, you can, right? It's not necessarily for you in particular that might have access to the U.S. stock market. It makes no difference. So the first most obvious one is now this is open for anybody that wants to participate, and people that wanted to buy, GameStop or whatever the next meme stock is going to be. And then the second one is going to be it's a building block for us to be able to build these more sophisticated products, which I'm sure we'll talk about in a bit, which are these ETPs, the exchange traded portfolios.
Yes, the exchange traded portfolio. Okay, we'll circle back to the regulation issue because that's obviously a very big one. But before I break that down, let's talk about this exchange traded portfolio, because that's essentially going to be a revolutionary product in that you're going to be combining various different asset classes together, right?
That's exactly right. And that's part of the reason why the stonks are an important building block to be able to create it, because they are a certain type of asset class. ETPs are basically going to be a basket of assets. And this can be stocks, equities. It can be cryptocurrencies or different protocols or projects. It can be stocks from other countries. It can be precious metals, energies, you name. You can put ETFs inside of the ETPs. Really, whatever assets that have a trackable price can be put in place. And we're combining that with the power of community. We've seen time and time again that the community is collectively really good at this game. There was a study that came out by I forget the university. They took all the top picks on WallStreetBets and tracking that against the performance of the index, like the S&P 500. And it turns out after this study, and this was before GameStop, before the prices were being pushed around by the community, they consistently beat the index. And so there's validity to the fact that if you have this community come together, you create these ETPs, they vote on what assets to put into these ETPs. They vote on the weights, right? So what distribution of these different assets you're going to have. Then they mint them and they make them available for everyone to use and enjoy them, right? You can have, high risk, low risk, inflation fighting, whatever it is.
So the online community is going to select a range of products across a variety of asset classes, bundle them up together into an ETP, and then put that on the blockchain for other investors to purchase and participate in the performance. Is that correct?
Yep, that's exactly right. And they too themselves can, I guess part of the hope is that they also want to do it.
So, well, I would imagine you'd have to participate in order to qualify as a community selection member. How does one become a community selection member?
So this is actually something that to me was also really foreign for crypto people. They're going to be screaming at their screen. This is something called a decentralized application or decentralized organization. I'm not sure the technical differences between those two, but people go in, they purchase these tokens, these WallStreetBets tokens, which you can actually now buy. And with those tokens, they represent a share in a company, right? And including the voting rights. So if you buy 10 shares, you're going to be able to do a vote that's proportional to 10 coins worth. And then that's how people can participate. And what's cool about it is this decentralized organization that starts almost behaving like a hedge fund actually gets the benefit of the hedge fund as well. These ETPs have, a small percentage fee built into them, just like ETFs do. And the money that gets generated from these fees goes into a treasury wallet, which those same token holders that make up the governments can decide what to do with it. They can pay themselves a dividend, buy a Super Bowl commercial, whatever, it's up to the community to decide, and it's completely driven by the people.
Well, you are really harnessing the power of the collective, of the community, and you're going to get a lot of pushback about this. I mean, I touched on regulation, and I can imagine that this is going to be very complicated because this is going to transcend borders, transcend time zones, languages. Which countries is this going to fall under? And ultimately, whose regulatory authority is this going to be subject to?
That's an excellent question. And it's obviously one that we've had on the site since the beginning. And we're really well prepared with some of the best lawyers in this field, international ones, so that we're able to mold and create these tools as best we can in preparation for that. But ultimately, I like regulation. Oftentimes I get questions about regulation as if it's a bad thing. They're going to shut you down. No, regulators really just want to make sure things are fair and that they work correctly and that people aren't getting scammed, et cetera. And right now there is no regulation on this because this is a new technology. Think of the first car driving down, I guess you can call it a road. There were no speed limit signs because there was no cars prior to that. Eventually the regulators said, no, I think it's good for society to have these speed limits and protect people that way. We're hoping that comes, because when that comes, that's going to be, a certificate of authenticity, right? It's going to make this thing more valid, but it's going to be complicated because you're right. It deals with different countries. They all have different laws, incentives. Some countries banning Bitcoin right now. Other countries are adopting it as their legal tender, right? So they'll all decide. So we're just going to kind of inch our way across. We're starting with simple things and working our way up. There's also, it can also get really technical as to how these things are created, which also affects, the regulatory perspective.
Well, to your point, regulation often has a long lag time before it catches up with technology. But the argument has been made, certainly in the crypto world, that once you have more clarity and more certainty with regards to regulation, with regards to taxes, that can, in fact, be good for an overall asset class because it removes the doubt, creates clarity, and opens the way for institutional investors to get in. So we'll see how all of that shapes up. But as you say, you're leading the way there. I also need to see how all of this shapes up with the crypto regulation that's been forced into that infrastructure bill. But in the meantime, though, how does one get one's money into this app, and who's ultimately going to pay me out? How would I get money out when I've had a successful trade? How is it going to be enforced that everybody plays? Is this by the rules? Is this where the smart contracts come into all of this?
Yeah. So the beauty of, how to make sure that these things that people are playing by the books is built into the smart contracts. It's built on top of this technology, this blockchain technology, which is proven to be infallible. I mean, I guess I'll use that word carefully, right? It's served its
infallible,
purpose.
Jaime. Nothing's infallible.
You're right. I take it back. But it's proven to really withstand, right? There's a reason why Bitcoin has gone up to $50,000 or more. It's transparent, it's auditable, it's decentralized, meaning it's everywhere. It doesn't have like a weak point where some government can just shut down the server. That's the beauty of blockchain, right? And it's open source. Everyone can see these things and audit them. So as far as what the rules that we're playing by, it's out there for people to see. I personally don't do the programming, so I couldn't understand it even if I wanted to, but I have a lot of faith in the people that do. They go in there and they pick it and they check it out. How do you get your money in and out? It kind of depends, different countries, because even cryptocurrencies as a whole is still kind of getting regulated and is still getting established. Different countries have different ways about it. But if you're in the US, for example, you can download one of these exchange apps, right? This can be like a Coinbase or Probit or a Bitmart. And you download it, you create an account, then you can just buy cryptocurrencies. You put in your credit card or PayPal, whatever method you want.
Okay.
And then you can buy Bitcoin, for example, or you could buy some of our tokens as well.
All right. So still kind of dependent on traditional financial infrastructure in order to get your money in some of those Coinbase and wallet apps like that in the first place, but ways to circumvent that, of course.
Well, if you're switching from fiat to crypto, you need to have an actual bank to do it, right? There's no way around that. There are a lot of people that just live on the blockchain and they never really want to use fiat anyways. They can pay for everything on cryptocurrencies. They can pay to everything with cryptocurrencies. Places can charge taxes with cryptocurrencies. So there's some people that say, I really don't need it, so I don't care. And then different countries. I live in Mexico right now. For me, I would have to use a different app of these that I was just mentioning, one that's sanctioned by the Mexican government, so that I can actually deposit my money into the bank account there. But that's still playing out.
So, Jamie, what do you say to the argument that a product like this is taking advantage of unsophisticated retail investors, preying on those who are getting caught up in the hype of crypto and blockchain, and that people essentially need the Wall Street pros as intermediaries to look out for them? What do you say to that?
I think outside of this product, people realized in an accelerated fashion, thanks to the pandemic, that they don't need to have these Wall Street bankers do a lot of their decisions for them. Well, let's let aside some of these meme stock traders that are having fun and taking a lot of risk. A lot of people realized I can invest myself in these companies or in an index fund, and I can do it from Robinhood or whatever it might be. And it really, it's pulled the veil on how sophisticated it can really be. So people have realized that they can be empowered. They've woken up to this concept that it's really not that tricky. At the end of the day, investing long-term, if you're doing that, is really not that tricky, right? Most stocks just go up in the long term. So that's fine. And then for the people that are wanting to take chances or whatever it is, they're enjoying it. A lot of people that risk a lot are having fun. They're treating it almost like a learning experience / game. And they know full well what they're getting into. And oftentimes they lose all their money, but we're talking a few $100s, and they say, oh man, I really wish I hadn't lost that. And then they put more money in and they try again, hoping that they'll make money, not expecting that they'll make that money. But the last thing I'll say is with this regards to the sophistication, it is a myth that these people are not sophisticated, right? They're anything but unsophisticated. They use memes. They call themselves crude names. But the things they've done throughout the year, with GameStop including, which was more than just a lot of people buying the shares. It was a sophisticated, coordinated, really well thought out effort. They've done it previously with other exploits that they're constantly looking for in the market. And they do it with incredible aptitude. So people that have been around will know that they're not unsophisticated.
Well, assuming it's the same type of investor that uses your new ETP that was participating in the Wall Street Reddit trading movement. Now, as you just mentioned, they were called the so-called dumb money, with traditional financial institutions being called the smart money. Now, of course, many of those embraced that, naming themselves apes and such. But, the argument was still made that this is not based on fundamentals, that this is all speculative. It's irresponsible trading. And at the end of the day, even though they may have made some money now, someone is going to be left holding the bag, and that the fundamentals are going to win in the long run. What do you say to that?
I mean, who isn't speculating in this? Everybody's speculating, right? Like, there's two things you can do in the market. You can either buy and hold forever and you'll make money, pretty much guaranteed, right? Or you can speculate. You can do that with Excel sheets. You can do that by doing cash flow analysis. You can do that by doing all really sophisticated things. That's perfectly valid. Don't get me wrong. Or you can do that by just making a funny meme picture, driving a car, saying, I really like how fast this thing goes. And I'm going to speculate that the company that made this car is going to go up too. Or that company turns out that, the guy that made this company is making ships go to, spaceships go to the moon. And then he makes them land again, like right side up. I think I like this company too. They're all guessing. They've all been right. They've all been wrong. Sometimes they get lucky. Sometimes they don't. But they're just calling it what it is, right? Where they're speculating by design. And it's not to say because you wear a suit and a tie that you're not going to get it wrong.
Well, the Warren Buffetts of the world may beg to differ when they do a more thorough fundamental analysis. But essentially, I get your point that all trading is speculative by nature. Now, having said that, I want you to speculate a little bit for me. What are your current meme stock picks? What do you think the next meme stock winner is going to be?
Well, right now, I think it's pretty clear that the NAKD, the Naked Corporation, uh, that one seems like it's got all the pieces to be to become a meme stock, right? Like it's got a funny name that you can make a lot of memes off of it. It's got a low price per share, right? That's always been a factor to some extent, which has always been interesting. It's got all the potential. The buzz is all in there. I wouldn't be surprised if that's going to be the next one that's out there.
Wait, what's the ticker for that one?
It's N like Nancy, AKD.
Okay. And what does this stock do?
No idea. It's going.
Other than have an interesting title.
It went up 50% in the past couple of days, and oftentimes, look, people.
So we don't know what the actual core company does.
I don't know what the core company does. I just looked at the chart and I see everyone talking about it.
So it doesn't even matter what the company does as long as there's enough buzz about it. Okay. NAKD, any other picks?
No, I'll just go with that one for today.
Okay, well, you know what? This whole idea that the buzz is really all that matters, or maybe another way to play the market, is gaining traction. I mean, we've got investors looking to capitalize on the meme stock mania without having to necessarily scour Reddit and other message boards to figure out what's trending through an exchange traded fund. We've got news that the Roundhill meme ETF, the ticker is MEME, is going to now screen stocks based on their social media activity, levels of short interests. That's according to an SEC filing on Thursday. And this ETF is going to essentially rebalance every 2 weeks based on the holdings of the so-called social media score. So they're going to track the buzz and put all those stocks together in an ETF. Not entirely dissimilar to what we saw from the Dave Portnoy-backed Van Eck Vector's social sentiment ETF, but this one seems to be a little bit more complex in the way that it picks its components. Well, what are your thoughts on this one?
Well, first I wish them luck because I know the guy that runs that fund. In fact, I quoted him for my book, and so I wish him really well. It's clear
the
indication.
Roundhill Fund.
The Roundhill Fund. That's correct. It's clear that there is interest, that meme stock investing is an actual thing. You have Warren Buffett fundamental analysts, right? You have high frequency computer traders, which, by the way, also don't do cash flow analysis. They're going in and out really quickly. You have technical traders that are drawing astrology signs on their screen, and they do that also, by the way, without fundamental analysis. And the different time horizons, different risk levels, etc. Now you have this new segment of meme investors, and they post funny pictures online about a stock that they really like. and that's kind of the strategy. But they've proven over the past, it's been more than just since GameStop. Meme stocks have existed for several years, and they've proven to make this a profitable strategy, right? So no one's laughing anymore at them. Hopefully they're laughing along with them. So the fact that there's now been multiple attempts, this one is more sophisticated. Mm-hmm. Obviously, it wants to predict what type of the stock meme stock is going to be going up next. I hope that they're able to do well. I question, though, how nimble they can be. A meme stock, by definition, comes and goes like the wind. Sometimes it'll stick around for months. Sometimes it'll just be there for a week. These ETFs have this procedures to rebalance and put the thing in the proposal on the board. And I don't know what their process is like. But we wanted to capture the same thing with this blockchain version of it. We can do this on a dime's notice. The people can put up, vote, rebalance in an instant, and they can do it 3 times a week if they want to, or 3 times a year.
What would you say, Jamie, is the collective capital, and I'm sure you're going to estimate here, of the sort of Wall Street bets movement? If we pulled all that capital together, what do you think we're looking at?
Oh man, that's a really tough question. It's difficult, but it's also potentially misleading. And I guess I'll start by taking a guess that we're probably talking less than $100 billion, but no less than $10 billion. It's a pretty wide range. But here's the reason why it's also wide. These guys and girls have figured out how to leverage that capital. There was an article on the front page of Business Week magazine that came out March or February of 2020, where they said, hey, these people from WallStreetBets are using out of the money, super cheap stock options to push stock prices around. And they're forcing these market makers to buy the underlying shares so that they can do their delta hedging, whatever. Fancy words for, I have $100 and I'm going to make that guy over there spend $10,000 to cover his risk buying the underlying shares. And that has proven to also be, which also was part of the GameStop squeeze. So even if you count the amount of dollars, the way they're using these leveraged derivatives, they're making those dollars count for a lot more.
Except it didn't quite work when they attempted the silver squeeze back in February. Same idea, same players, but it didn't quite work. What do you think happened there? What's your take on that?
Well, remember I said that GameStop was more than just people buying the shares. It was a very sophisticated maneuver. It was not just, the news simplifies it for people to understand it. And it's fair to just say that it was a short squeeze where a lot of people bought. So that people try to do the same thing with silver, but they didn't understand the mechanics of what happened with GameStop. There's a lot of things that I won't get into on this one. But they try to do the same thing with silver, and it doesn't have as much traction. Because it didn't have the same profile. It didn't succeed in part because it's a huge market. It's a much bigger market to move. In order to pull that type of maneuver off, it's not just about buying these ETFs or these futures or whatever. They would have to take physical delivery on silver. And that is their synthetic version of using leverage, right? It forces an entire mechanism of things and it trickles a huge domino effect. And that would be more effective at pushing up the prices than to just buying it on Robinhood.
All right, going to segue from silver to digital gold, which of course is Bitcoin. And I'm assuming you're bullish on Bitcoin if you now are involving the whole crypto world into your next venture. What is your outlook on Bitcoin?
Look, the mistake that I made for the past decade was assuming that crypto was Bitcoin.
You can choose another altcoin or digital coin.
No, it's not though. It's the DeFi, right? So these things are just stores of value, and they're just in there. And you can think of it as stock if you really wanted to call it that much, and that's fine. But it's a supply and demand, and right now it's in demand, and then it's not so much in demand, and then China does things, and then and so these things fluctuate just like another asset class. And all the stuff that we're working on is just, it's borrowing from the original blockchain technology. Am I bullish on Bitcoin? Yes. Am I bullish on cryptocurrencies in general? Yes, very much so. There's a lot of the same reasons why most of the defenders of cryptocurrencies, I continue to have them. I don't necessarily know if it's the greatest investment because of the volatility profile, these different things. But thankfully, when it goes up, the rest of crypto goes up as well.
So you're not necessarily that bullish on Bitcoin as a long-term store of value asset?
No, it is a store of value, right? Like it's a store of value because it's already storing value and people are using it for that. They're not using it. The original Bitcoin was, this is a digital currency. You can buy, a hotel room, or that's not what they're using Bitcoin anymore, because it turns out there's a lot better ways. They borrow from Bitcoin and they fix a lot of these things as far as the speed and the cost and blah, blah, blah. But everyone still loves Bitcoin because all of the ideology is still there, and it's the biggest name and it's the most marketable. So people are now using it like a savings account, like a store of value. They buy it, they hold on to it. And then when they want to use their cryptocurrency to buy stuff, they switch it to a different one, like Ethereum or whatever it might be. So I definitely am bullish on Bitcoin, the actual Bitcoin itself, for all of the same reasons that people have been, which is, the supply is going to go down. You're going to have that component of scarcity. You have that component of demand, more and more people in countries, and it continues to withstand all these hits that it's taken from pretty much everywhere, and it's still here, and it's obviously not going anywhere.
Now, I know that you've been dabbling in the NFT space, at least based on your Twitter account. You're interested in exploring that. That's linked to Ethereum largely, as well as some other platforms. But what's your take on NFTs?
So I'm sitting outside the grocery store waiting for my wife to get out. And I sent out a tweet and says, I want to buy an NFT. What should I buy? And I just got a tremendous amount of attention and retweets and comments. And then people gave me a bunch of NFTs. Now I have like 50 of them, and I still haven't bought one, by the way. But I wanted to learn what this is about.
If you're getting them for free, right?
Well, that's true. I still want to buy one, right? I like to learn hands-on. But the community was super, inviting, and it was just, and it was interesting. I wanted to learn what it is, this buzz. There's obviously a lot of money in it right now. It's obviously in style. It's a fad. People are buying pictures of rocks for hundreds of thousands or millions of dollars, right? We've seen these things. If we want to use the term bubble, I don't like it in this particular case because it's not technically even close to what bubbles really are. But this is a popular thing that's maybe going to come and go. Maybe people won't buy these pictures of rocks for that much money. But there's more to those NFTs. As I dug into them, they have this utility component to it, which is like, yes, I like this picture just like I like my Monet or my Da Vinci, whatever it is. I value it. I'll pay for it. But there's a tech component too, which is like, oh, since I own this thing, now I have preferential treatment elsewhere on games, on live concert events, on whatever it is. It's like, right. I have this little thing here. I get to go backstage because of it, right? And so that's really interesting to me. I'm very much going to be exploring a lot more of that world because I think that's the reason why this is getting the attention, and not because there's pictures of rock. There's a sustainable value.
Giving you elevated status, if you will?
Yeah, people like to show off, sure. People like to put whatever they spent, and that's fine. But it's also elevated experiences, right? So we're considering, and we're probably going to, we're in the process of finalizing it because we're liking this NFT concept, giving out these NFTs to people that have already purchased their tokens. And with these NFTs, when they do like their liquidity yield, farming, whatever, we can give them a little bit extra percentage there, just as a thank you for being there since the beginning. So there's actual tangible benefits to having these little certificates above and beyond, look how much money I spent.
Look, you're right. People like to show off. They like to show off their collections, be it their physical Monet or their digital NFT, and they like to have VIP status. So if you combine the two, that appeals to a lot of our base instincts, if you will, as humans. Now, Jaime, the argument is being made that we're seeing all of these products and inflated assets. You don't like to use the term bubble, but I think there's a lot of inflated assets out there, from cryptos to NFTs to stocks, because there's just so much money sloshing around in the system with this unprecedented fiscal and monetary stimulus. Now, eventually, the thinking is that at one point or another, the party is going to end, that the Fed at some point is going to have to start raising rates or start to taper. What do you think happens then?
Well, first, I just want to correct something. I don't like to use the word bubble specifically with NFTs, right?
Okay.
All the other ones are fair game because NFTs, they're just different. But the rest of it, the question still stands. When does the party end? Whenever the Fed stops printing money. But for as long as I've seen this, it's been a bubble, right? Like, since WallStreetBets started in 2000, I forget what year, 12, and during that entire time, people started posting pictures of Ben Bernanke, then Janet Yellen, and now you have Jerome Powell, and they're always making kind of the same joke or whatever it is, But the fact is that the population growth is a thing. Inflation, healthy, demand-driven inflation is a very healthy thing. So the inflation of money for the right reasons is, as long as not supply based, is a very healthy thing. Who knows when this party is going to end? But the fact is, right now, there's a lot of money in there. And the people that have been saying since whatever they got rid of the gold standard is, in like the 70s or whatnot, they're screaming.
50 years exactly as of a month ago to the end of the gold standard.
You're going to learn your lesson. You people, these dollars aren't backed by gold anymore. They've been waiting 50 years to get their moment in court. Maybe they'll get it, right? Maybe they'll be right. But during this 5 decades, people have just been making money by buying stocks and being long. Why not? Why not just go with the flow and make money, right? And if circumstances change, then that's when you change your approach.
So you're not concerned that The music is going to stop playing anytime soon? You think there's still a long way to run here is what I'm hearing you say.
I know the music will stop. And when it stops, you stop dancing and you look for a chair and you hope you get one, right? But it's been going for so long that, we don't know whether it's going to be a month, a year, a decade, or a century before the music stops. I mean, I think that's much more philosophical, deals with the US dollar being like the, de facto currency around the world. But there's a lot of reasons why the music probably will stop. But you're better off making money until that happens, right? And then take your small loss before you just decide to change your strategy.
All right. That was a pearl of wisdom, one could say. I wanted to ask you, before I let you go, to share a pearl of wisdom or a gold nugget of truth that you live by. Either one.
So I'm sure we've all heard you should be greedy when people are fearful and fearful. But that's a complete BS. I think people should be greedy when people are greedy, and people should be fearful when people are fearful, right? That means, and it goes along with what I was just saying. The stocks have been going up as long as I've been paying attention to them. And as far as I can see, keep buying the stocks. Don't wait for them, right? Just because people have been greedy for 20 years, you could have made a ton of money. So be greedy along with the market. And then if people start getting fearful because the Fed stops printing or whatever, then you can be fearful along with everyone else, yank your money, and then have a nice day.
All right, Jamie, you're challenging the Oracle of Omaha, Warren Buffett, with that pearl of wisdom nugget of truth. But thank you so much for sharing it with us. And thank you for joining us on Kitco News. Jaime Rogozinski, appreciate it.
Thanks a lot for having me. I had a good time.
All right. And thank you for watching Kitco. Keep it right here.